There. Well, turning back to Greece, a new proposal submitted less than a half an hour ago. Best-selling author of numerous works, including The Death of Money, and also he is the chief global strategist at West Shore Funds, Jim Rickards, with me now. So, Jim, great to see you.
Good to see you, Deidre.
So, Greece just submitting a plan, so it seems. You heard my colleague on the ground there in Athens, Ashley Webster, talking about it. But what happens next? I mean, we're at this crossroads for Europe.
Well, you know, Deidre, I've been saying for 5 years there will not be a Grexit. There were certainly days when it seemed that the entire world was lined up on the other side of that. I'm sticking with that. This is very significant. There'll be apparently a vote in the Greek parliament tomorrow to ratify it. This is what the Germans wanted to see. They said, don't just give us a plan, but take some concrete action to back it up. There'll be a European summit over the weekend. In all likelihood, this will be resolved, at least for the time being, by Monday. It never really goes away. Maybe it's a year down the road and we have to face this again, but it's a very big deal.
But you're saying, so we know as far as Greece is concerned, we have a plan. Now, as you say, it's going to be reviewed. It needs something like 28 signatures, but you're saying, okay, by Sunday night, something will be decided that essentially lets Greek banks open. From what we understand, there's something like 4 days of cash only left.
Right. Remember, the United States had a bank holiday that lasted longer than the Greek bank holiday so far. So this is a hardship for the Greek people. I'm not making light of it. This is very serious, but they are working their way through it. So I expect to say this will be resolved by
because
by
otherwise it's a simultaneous bank debt and currency crisis, and we've only seen a handful of those since the 70s.
Right, but this is my point. Despite the animosity, the hardship on both sides would be so great that's what's forcing them to come together to do a deal. Germany doesn't want Greece to leave. The Greek people don't want to leave the euro. They voted no on the referendum, but 70% of the Greek people want to stay in the euro. You take a 10% haircut on your pension, no fun. But if you go back to the drachma, you're going to take a 90% haircut.
Okay, because I was going to say, one of your other books, which I love, Currency Wars, I wanted to get your take on what if Greece does go back to the drachma. You just essentially answer that. Then it's just mayhem.
Correct. Well, not just mayhem, inflation. And the Greek people understand that. They remember the drachma. It wasn't that long ago. So you know, people like Krugman say, go back to the drachma, lower your unit labor costs, help exports and all that. But the inflation wipes out the pensions, the savings, the insurance, and the Greek people understand that. That's why they favor the euro. That's why this is going to stick together, despite the hardships.
Are there any implications, given your scenario, for U.S. investors? So, in other words, some sort of, let's even say it's a non-ideal deal, but is made Sunday night, more or less there's a temporary resolution. What does it mean for U.S. investors, if anything? Well,
it should be a little bit bullish at the margin. There are enough other things for people to be concerned about, but this will be a positive development. But, at the margin, given the fragility of the world, we talked about Greece and we all know what's going on in China, it's just very difficult to see how the Fed raises interest rates in September. I've said that all along also, that they're not going to raise rates this year. It continues to be my view. But given the fragility, it's hard to see how Yellen makes that move.
All right, Jim, since we're talking about the Fed, I know you think, along with numerous other investors, that the Fed is too heavy-handed here in the U.S. It's nothing compared to what goes on in China. As we said, I feel like the Chinese government, Chinese regulators basically threw the kitchen sink at the Shanghai. They reversed this 3-week slide that would erase something like $3 trillion of market worth. What is your take on investing in China?
Well, I've said it all along, I wouldn't put a nickel in China. The only way to play China is buy a company that is as big as China, like IBM, because China really can't push IBM around. One needs as much of the other as the other does. So you can play China indirectly through IBM. It's a good opportunity for Chinese investors to sell, get out while the getting's good. One of the most popular forms of entertainment in China is called Beijing opera. And it's not at all like Western opera. It's more like a circus. You have acrobats, smoke, mirrors, all kinds of tricks. They've now turned their market into Beijing opera. The whole thing, you say it's up. I say, well, it's not up. It's not even a market anymore. So you have 46% of the stocks are not trading. So there's exchanges open, but the stocks are not trading. Institutional investors cannot sell. Short selling is banned. Government has intervened. So
you cannot bring any new companies to market. The
Correct.
idea being support the stocks that already trade.
Right. So there's no market left. What you have is a facade. If it's up a little bit, I would say to Chinese investors, good opportunity to get out. By the way, for American investors, look in your 401ks, see if Morgan Stanley or Goldman Sachs or Merrill Lynch sold you an emerging markets fund. Look at what's inside. See if there are Chinese stocks in there. A lot of people own these things and don't even know.
Jim, let me just ask you a contrarian question. If the Chinese government can and is so willing to step in with any means necessary, they don't want their markets to fail. Wouldn't that be an opportunity for me as a U.S.-based investor to buy there?
No, because they will fail eventually. In the short run, yes, governments can prop it up. The Fed's been propping up our market since 2007, but it's non-sustainable. You can actually do it for a long period of time, but at the end of the day, markets haven't cleared. We don't know what things are really worth. There are good investments out there. Some of the best investments I'm seeing are in private equity, venture, angel investing, a lot of the alternatives you talk about on your show, Deidre. But these public markets are all sort of manipulated, so why would you be in them?
All right, Jim Rickards, wonderful to see you. Thank you for coming in. Jim Rickards joining me there, author of The Death of Money.